Some people are saying that Tesla's shares no longer seem to be as worthy as before. Let's dive in and take a deeper look into the company's stance as a good investment. Tesla shares dip after third quarter deliveries report. Shares of Tesla dipped down more than 8% after the electric vehicle maker released third quarter production and delivery numbers on Sunday that fell short of analysts' estimates. Tesla reported 343,000 total deliveries and 365,000 vehicles produced during the quarter, which missed analysts' expectations of 364,660 vehicles delivered, according to estimates compiled by FactSet-owned Street Account. Deliveries are the closest approximation of sales reported by Tesla. Total production increased from the prior quarter of 2022 when the company said it made 258,580 cars. Tesla produced 19,935 of its more expensive Model S and X vehicles and 345,988 of its more popular Model 3 and Y vehicles during Q3, according to its report. Tesla faced growing pains at its new factories in Germany and Texas, executive turnover, and soaring commodity prices in the third quarter of 2022. Analysts were divided over the electric vehicle maker's report, and the sliding stock price suggests investors are worried about the delivery numbers. A Goldman Sachs analyst maintained Tesla's buy rating and said the company will continue to benefit from the long-term shift to electric vehicles, while a JP Morgan analyst kept an underweight rating on Tesla, saying that the earnings miss was in line with the firm's expectations. Tesla's AI Day also did little to boost the company's short-term prospects. While bullish analysts saw the Tesla bot as a project with potential, some AI and robotics industry insiders scoffed at the early prototype, price, and timeline Musk and Tesla employees presented. Tesla's stock price since the last AI Day. Tesla's AI Day was very technical, as the event serves more as a platform for recruiting the brightest minds in the AI space than a display for investors. Many experts were hoping for a clear update on when fully self-driving cars and working robots would be ready to launch. The Optimus was clearly not yet a working robot, even though Musk speculated that they would be able to mass-produce it and sell it for less than $20,000 in 3 years. AI experts were not impressed by the limited capabilities of the robot, and they felt that Musk had overpromised. The entire livestream of the event is up on YouTube, and it's over 3 hours long and has over 1.8 million views. Tesla's AI Day was live on September 30 after trading hours. Tesla stock closed on September 30, 2022 at $265.25. After the weekend, Tesla stock opened on October 3, 2022 at $254.50, then closed at $242.40. Tesla stock opened on October 7, 2022 at $233.93 and closed at $223.07, which was a 4.64% drop for the day. It seems investors took the time to digest what happened at Tesla AI Day, and many weren't impressed by the humanoid robot prototype that came on stage at the beginning of the presentation. The presentation was underwhelming because the two robots couldn't do anything significant. The robot had been ridiculed, but Musk had defended it by saying that people don't understand its value. Many feel that Elon needs to improve at managing expectations. The company doesn't appear to be as close to fully self-driving cars as expected. The robot taxi service that's supposed to be a mix of Airbnb and Uber is nowhere near market-ready either. Why was Tesla stock down? We can't ignore the role that Tesla's CEO Elon Musk plays in the price of his company's shares. The controversial CEO seems to always be in the media for some antics, from introducing a surprise plan to end the war in Ukraine to announcing that he's again buying Twitter. Musk went from showcasing the humanoid robot at Tesla's AI Day to sparking talks about purchasing Twitter just a few days later, and all of these moves have hurt the Tesla stock price. At the time, the $44 billion bid to purchase Twitter concerned many investors, as this is a hefty price tag for a social media platform, particularly a deal that seemed perplexing at best. The issue with his announcements is that investors are unsure how this would dilute Musk's focus on Tesla. Investors were worried that he could become more hands-on in the management of Twitter if the purchase goes through. Elon's intellect and potential might be limitless, but his bandwidth is not. All of it sends mixed signals to a marketplace that does not react well to uncertainty in volatile times. Watching a robot clumsily carried on and off the stage did not help. Elon Musk's Twitter problem. Musk agreed in April 2022 to buy Twitter for $54.20 per share, or about $44 billion, but then tried to back out of the deal after the company's value sank, along with other tech stocks and the broader market. Twitter sued to force Musk to abide by the deal. It was up to the company to accept Musk's renewed offer or force the billionaire to go to court in an effort to seal the deal. Musk and Twitter have been at odds almost since Musk first revealed his interest in the company. In the course of just a few months, Musk went from being Twitter's largest individual shareholder to would-be board member to unsolicited bidder to unwilling buyer. For months, Mr. Musk's $44 billion acquisition of Twitter has roiled the company's 7,500 employees as the billionaire made pronouncements about how he would change the service and then tried to back out of the deal. Now, with his takeover back on track and set to close no later than the end of October 2022, disquiet inside Twitter has intensified. Twitter's employees' fears were stoked when it was reported that Musk planned to cut Twitter's staff by as much as 75% in the coming months, reducing its workforce to a little over 2,000 people. Twitter employees have also been worrying over how their compensation might change once Musk transforms the company from a publicly traded firm into a private one. The investment banks that have committed $12.5 billion to finance Mr. Musk's takeover of Twitter continue to work on finalizing those commitments ahead of the October end deadline. Once the deal is closed, Mr. Musk is expected to run Twitter on a lean budget. The billionaire is taking out more than $12 billion in loans to finance the Twitter acquisition, which puts him on the hook for expensive repayments. Investors who are contributing more than $7 billion in equity to the purchase will also eventually expect returns. Bottom line? Not even Elon Musk can escape this bear market, and that has implications for investors far beyond the stock's diehard followers. After defying gravity for much of the past 2 years, Tesla's stock is down nearly 50% from its November peak and has given back all its 2021 gains. Much of the electric vehicle maker's decline came in the past time when it plummeted 30% after Chief Executive Musk reversed course and said he planned to complete the $44 billion acquisition of social media platform Twitter, and another 8% after Tesla AI Day and the release of its third quarter reports. Tesla reported third-quarter earnings with revenue of $21.45 billion, which was below a consensus estimate of $21.98 billion, according to FactSet. The company's earnings per share of $1.05 topped the estimate of $1 even. What happens with Tesla's stock matters to so many investors because, even if they don't own the shares directly, the company has become a larger and more important component in many stock market indexes, specialty exchange-traded funds, and growth funds. With a market capitalization of $687 billion, advances in its shares tend to lead to outsized gains in the indexes to which many funds are pegged, and declines can result in heightened losses. Well guys, that's all for today's video. If you enjoyed it, then don't forget to like and subscribe to the channel. See you next time.